If you're watching this, you likely feel it. That subtle vibration in the economy. That sense that the rules of the game are changing, but no one is handing out the new playbook. We are living through one of the most confusing financial times in modern history. On one side, you see the stock market hitting all-time highs. On the other, you look at the grocery store receipt, the price of gas, the housing market, and you think, how does this add up? It feels like we are walking on a tightrope. And the truth is, we are. But today, I'm not here to talk about the problems. I'm not here to spread fear. I am here to talk about the solution. Because hidden inside this chaos is a door. A door that only opens once every 10 to 12 years. And that door is closing fast. We are standing at the precipice of what I believe will be the last big wealth opportunity for a decade. Now, when I say wealth opportunity, I'm not talking about getting rich quick. I'm not talking about gambling on a meme coin or hoping a lottery ticket hits. I'm talking about a fundamental transfer of wealth. A moment where the tectonic plates of the global economy shift, trillions of dollars move from one set of hands to another, and a new class of millionaires is minted overnight. This happened in the late 90s with the internet. It happened in 2008 with real estate and the stock market recovery. And it is happening right now. The difference this time? The window is smaller. The stakes are higher. And the majority of people are going to sleep through it. In the next 25 minutes, I'm going to break down exactly why this is happening, where the money is flowing, and, most importantly, how you can position yourself today to catch the wave before it crashes over the mainstream. If you want to secure your financial future for the next 10 years, you need to put your phone down, turn off distractions, and listen closely. Because the information I'm about to share is the blueprint for the next era of wealth. To understand where the opportunity is, we first have to understand why the old system is broken. You cannot find a new land if you are staring at the old map. Let's look at the hard numbers. For the last 15 years, the world has been running on an experiment called cheap money. Central banks printed trillions of dollars, yen, and euros to keep the economy afloat. Interest rates were basically zero. What did that do? It made debt cheap. Companies borrowed billions to buy back their own stocks. Homeowners borrowed against their houses. Everyone felt rich because the numbers on the screen went up. But there is a catch. You cannot print your way to prosperity without consequences. The consequence is inflation. We're seeing it now. The cost of living is skyrocketing. Now, the central banks are in a panic. They're trying to put the genie back in the bottle by raising interest rates. This is where the pain happens. When interest rates go up, borrowing becomes expensive. The cheap money found dries up. We are currently seeing a massive liquidity crunch. In simple terms, there is less cash flowing through the system. History tells us exactly what happens next. When liquidity dries up, weak companies fail. Overvalued assets crash, and the market gets flushed out. It's painful. It's scary. But, and here is the key insight, this flush is the mechanism of wealth transfer. When a market crashes, it doesn't just destroy value. It resets prices. It takes assets that were overpriced and expensive, and it drops them to bargain basement levels. Think about real estate in 2010. Think about the stock market in March of 2009. The people who had cash during those crashes didn't panic. They didn't see a crisis. They saw a sale. They bought assets for pennies on the dollar that would set them up for the next decade. We are entering that reset phase right now. The debt bubble is bursting. The era of easy money is over. And as the old system collapses, the capital is looking for a new home. Your job isn't to panic. Your job is to be that new home. So, we know the old monetary system is resetting. But where's the new growth going to come from? Wealth isn't just about preserving what you have. It's about capturing the upside of the future. This brings me to the second force at play, the technological supercycle. We are witnessing a convergence of technologies that is unlike anything we've seen since the invention of the internet. I'm talking about artificial intelligence, decentralized finance, and automation. Let's talk about AI. You've heard the buzz. You've seen ChatGPT. But most people are underestimating the speed of this change. We're not just looking at better search engines. We are looking at a complete overhaul of productivity. Companies that integrate AI effectively are going to see their profit margins explode. They will be able to do the work of 100 people with 10 people. This creates a massive gap in the stock market. There will be the companies that adapt, and their stock prices will soar. And there will be the dinosaurs that refuse to change, and they will die. This is the biggest opportunity for equity investors in a generation. But it's not just about buying the big tech giants. The real wealth, the asymmetric wealth, is going to be made in the pick and shovels plays. The specific chips, the software infrastructure, the niche data companies that are powering the AI revolution. But technology is changing more than just how we work. It's changing how we own assets. We are seeing the rise of tokenization and digital assets. For the first time in history, we can fractionalize ownership of real-world assets like real estate, art, and vintage cars. We are moving from a centralized, bank-controlled financial system to a decentralized, transparent system. This is the Internet of money. Just as the Internet democratized information, blockchain technology is democratizing finance. If you position yourself in these sectors early, while the technology is still maturing, you're catching the ride on the ground floor. The masses won't enter this space until it's mainstream. By then, the 100x gains will be gone. The opportunity is now, while the technology is still misunderstood by the general public. Now, I want to pivot. I've talked about high-tech, AI, and digital assets. That's the offense. But every good strategy needs a defense. As the money printers run wild and governments spend money they don't have, trust in fiat currency, the paper money in your wallet, is eroding. When trust in currency erodes, wealth always flees to the same place it has for 5,000 years: hard assets. We are entering a renaissance for hard assets. This isn't just gold, though gold remains a vital insurance policy. I'm talking about productive hard assets: farmland, water rights, energy infrastructure, critical minerals. Let's look at energy. The transition to green energy is happening, yes. But you cannot power a modern economy with windmills and solar panels alone. The demand for oil, gas, and uranium is skyrocketing. The world runs on energy. Owning the means of production, or the companies that supply the fuel, is a hedge against inflation like no other. Then there is real estate. The days of buying any shack and watching it double in price are gone. The era of ultra-low interest rates inflated a housing bubble that is currently correcting. Do not chase overpriced homes in declining markets. Instead, look for distress. Look for commercial real estate, office buildings, retail centers that are currently trading at massive discounts because of the work-from-home shift. Smart investors are buying these distressed assets right now, converting them or refinancing them and renting them out at sky-high rates. Wealth in this new decade is about owning things that cannot be printed out of thin air. If you own a digital asset that solves a problem or a hard asset that people need, you're holding real wealth. If you're holding cash, you're holding a melting ice cube. You must convert your labor into assets that will not only survive the storm, but appreciate because of it. We've covered the macroeconomic reset. We've covered the tech revolution. We've covered hard assets. Now, I need to talk about the most important asset, your mind. Because here is the brutal truth. You could give the best stock tip or the best real estate deal to 100 people, and 90 of them will still lose money. Why? Because they cannot master their own psychology. The next decade is going to be volatile. We're going to see news headlines that scream crash. We're going to see governments imposing new regulations. We're going to see panic in the streets. The average person will react with fear. They will sell at the bottom. They will listen to the noise on TV. They will stay in their comfort zone, working a job they hate, saving money that is losing value, hoping the government will fix it. But you, the person who has listened to this far, are not the average person. To capture this last big wealth opportunity, you need to develop what I call anti-fragile thinking. You don't just want to be strong. You want to be the kind of person who gets better when there is chaos. You need to detach from a herd. When everyone is buying, you should be cautious. When everyone is selling, you should be greedy. This requires discipline. It requires delayed gratification. You might have to live on a tighter budget today, so you can pour every extra dollar into buying assets that will make you wealthy in 5 years. You need to become an expert. Stop consuming content that makes you angry or afraid. Start consuming content that makes you smarter. Learn to read a balance sheet. Learn how blockchain works. Understand supply and demand. The wealth gap is not just a gap of money. It is a gap of knowledge. The rich aren't luckier than you. They just see the world differently. They see the crisis, and they see the opportunity hiding inside it. You have to be ready to act when the moment arrives. Because these windows of opportunity, they don't stay open long. Sometimes they're open for just a few months. So, how do we take this information and turn it into a bank account? Let's get practical. Here is your get ready checklist for the next 30 days. Step 1, the audit. You cannot fix what you don't measure. Look at your finances. Where's your money leaking? Are you holding too much cash in a savings account earning 1% while inflation is at 7%? That is a guaranteed loss. Stop it. Move that cash into a high-yield savings account or a money market fund immediately. Stop the bleeding. Step 2, build the fortress. Before you swing for the fences, make sure you have a fortress. This means 3 to 6 months of expenses saved in liquid cash. This is your FU money. It ensures that if you lose your job or the market crashes, you don't have to sell your investments at the bottom. You must have this foundation. Step 3, pick your lane. Don't try to do everything. If you love technology, dive into AI stocks and the infrastructure of the web. If you like tangible things, look at distressed real estate or commodities. If you believe in the future of money, look at Bitcoin and Ethereum. Pick one area and become a master in it. Read one book a month on that specific topic. Follow the smartest people in that niche. Step 4, dollar cost average. Do not try to time a market. It is a fool's errand. If you have identified a quality asset, start buying it consistently. If the price drops, buy more. If the price goes up, buy a little less. This removes the emotion. It makes you a robot. Robots make money. Emotional humans make mistakes. Step 5, secure your upside. This is the advanced move. Once you have built a position, look for ways to leverage it without risking ruin. If you invest in real estate, learn to use good debt to buy more property. If you're in stocks, learn how to sell covered calls to generate income on the side. Use the tools of the wealthy to work for you. We are approaching the end of this video, but we are just at the beginning of this cycle. Let me be very clear with you. The easy money era is dead. You cannot just buy a diversified index fund, close your eyes for 10 years, and expect to retire rich. Those days are gone. The next decade requires active participation. It requires courage. It requires you to stand apart from the crowd. But the reward for doing so is immense. We are looking at a bifurcated economy. The next 10 years will create the largest wealth gap in human history. On one side, you'll have the people who ignored the signs, who held on to dying assets, who let inflation eat their savings. They will work harder and fall further behind. On the other side, there will be a new group of wealth builders. People who saw the reset coming. People who bought the dip. People who position themselves in the technologies of the future and the assets of the past. You get to choose which side of that line you stand on. This is your warning. But more importantly, this is your invitation. The window is open right now. The opportunity is sitting on the table, waiting for someone to pick it up. Don't overthink it. Don't wait for the news to tell you it's safe. By then, it will be too late. Get your finances in order. Educate yourself. Take the first step today. If you found this valuable, share it with someone you care about. Because wealth is better when we build it together. But most importantly, take action. The clock is ticking. The decade is waiting. Get ready.